All right, today we are going to answer 3 quick questions around cash value life insurance and everything and anything with it. So, question number 1, what is your opinion on taking out loans in the first policy year? So, my opinion is always look at the numbers. When looking at a cash value life insurance policy, no matter how well it is designed, what is your internal rate of return in the first year? Not the dividend rate, but the internal rate of return. It will almost always be negative with a cash value life insurance policy. So if you have a policy that has a negative 10% internal rate of return in the first year, and you borrow out or you borrow against the policy at 5%, technically I've got a negative 10% internal rate of return. I took a hit on my money, and I'm also paying 5% to the insurance company. So I'm really inflicting a lot of pain in that first policy year. Now, with that said, a lot of people take out first-year loans. And really, the reason why is they view it as, here's my cash value life insurance policy. I'm aware of the first-year hit. However, the worst part about a cash value life insurance policy is the first year. The best part about it is every year after that. Gets better and better. My money constantly compounds. That's the key there, constantly compounds, and there is no lost opportunity cost. Meaning, once a dollar passes through the cash value, yes, I have a cost to borrow, and to be specific here, the first year it hurts me more than it helps me, but as time passes, it becomes more and more attractive to me, the policyholder, as that money I've loaned against the policy is constantly compounding. So hopefully that made sense for question number 1. Let's progress on to question number 2. There's a lot more I want to add, like cash value collateral loans and such, but I want to stay focused today. Number 2, do I have to have a lot of money in order for a policy to make sense? Fantastic question. No. We work with a lot of individuals, and we show this often with their numbers. They look big. So this is where we get this question where people put in 6 figures, 7 figures. The largest policy that we work with is with a bank that we work with, and that's 8-figure deposits they make. So sorry if I sometimes make it imply that we only work with people that have a lot of money, or if it only makes sense to put a lot of money into a policy. My first policy was right around $200 per month, and I still have that policy today. So you do not need to have a lot of money to make this work. And if you said, okay, I don't have that much, maybe I can only allocate $200 per month, a total of $2,400 per year. But I still want to maximize the cash value with that amount. The question specifically would be then, can I still have a minimum premium? Can I still have a 10% premium? Or how low can I go? And the answer is you can always drive that premium down. Now, my age and gender and health does have a role in that. But what I like to look at, say I'm looking to pay in $3,000 per year, and that's the max I know I'm ever going to be able to pay in. Well, look at the $3,000 policy. We'll max it out, show just an all base premium policy, then a minimum premium policy, so you can see the differences side by side. Maybe I'll put an option out there that has $3,000 per year going in, and it's got a $500 base premium and a $5,000 MEC limit. This way, I'm paying $3,000 per year, a healthy amount is going toward PUAs, and I have some window room to be able to add more money into the policy as well. But I'm going to show that along with 2 or 3 other options. This way, you as the consumer can see everything up front and make the decision that you feel is best for you. But to answer your question, no, you do not need to have a lot of money. It does depend again on your age, health, and gender, but at the same time, we work with people that put away a couple $100 per month. Sometimes it's $100 per month for their kid or something like that. Very easy to start a policy in that respect. And then 3, this is a good question. If you don't need to finance because you have cash on hand, does it still make sense to borrow from a policy? So to answer this question, if you don't need to finance and you've got the cash on hand, should I borrow from my policy and take on a cost to borrow loan interest that will go to the insurance company? Or if I leverage it with the bank, interest that'll go to the bank, I'm going to have a cost to borrow. If I don't want to pay any interest, should I just fund something in cash? And the answer is it really depends on one's preference. When you look at it from a pure numbers perspective, a lot of people we work with will say, you know what, I don't like that. I get that life insurance policy loans, I can pay them back however, whenever, I don't even have to pay them back. What a lot of people do though, they say, I don't like debt, I don't like the thought of debt. I like a cash value life insurance policy because it's a safe, liquid, tax-free area to position funds, great alternative to money I have sitting in cash. They move it into a policy, continues to grow, and then whenever they have the need to finance anything, they use additional cash they have because they are disciplined savers. Then you can compare that to the individual that says, you know what, I want to flow even more money through this cash value life insurance policy, and I do want to finance because I really like the idea that my money just constantly compounds for me and there's no lost opportunity cost. I love the fact that I can compound at 4% on my entire cash value and then leverage the policy as a personal line of credit to finance elsewhere. But no matter what happens, when I borrow against that policy, I keep earning, call it that 4% internal rate of return, or whatever the IRR is. So I hope that this rapid fire question has been helpful. All of these questions, we have very long, detailed videos with visuals where we really break it down because I like to do that stuff. But I hope this one helps. Reach out if you have any questions. Hit the like button and subscribe button if you enjoyed it. And I'll talk to you soon. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.